Hello everyone, I hope everything is good and under control. First of all, I want to welcome you in this men- non mentorship in this beautiful course, private course, okay? And I want to share with you um, a lot of things based on my experience. We'll discuss each topic based on my experience, and I'm totally 100% sure that the things that I will give you, you have no idea about. Okay, you can know some stuff, you can know some tools, but it's not the same way, and it's not the same vision, and it's not the same deep understanding to the way, my way, how I see that on the charts, and how I apply that actually on my life trading. So first topic, the market structure. We will see the history of the market structure, why we use market structure, how to read the ALGO market structure, live example reading the market structure, and the market structure phases. Let's start. First of all, the history of the market structure. The market structure is not something new, okay? It's too much old. The theory of the Dow. This guy is the guy that creates the market structure, understand the market structure, and is the first one taught and create this theory 100 years before. So it's a very, very, very old tools. So the question everyone have in his mind currently is, why a certain weapon like this still working? Let me tell you an example to understand why this thing still working in advanced way, in a complicated way a little bit. Of course, it's working in a lot of advanced way and the new way, not working like the old stuff now. It works because it's like economy, like example. There is the cycle of the economy, deflation, inflation, the peak, the bottom. Okay, there is a cycle on the economy, and every 5 years and 10 years, this cycle end. Okay, and start from the beginning. Higher highs and higher lows and higher highs, the peak, and go downs and go to the peak and goes down. And after 100 years, it goes all the way down. Okay, literally to the 50% or less than that. No one can know the exact numbers, but it close to that. Why that happen? We don't have people that master the economy so well. A whole fucking country that controlled by a government, a lot of smart people. Okay, a lot of smart people, a lot of economic people, a lot of very, very genius people. They cannot stop something like this. It's a cycle. No one can stop it. That's exactly what I think Donald Trump trying to do currently, but he cannot stop it. Okay, the cycle goes. Currently, USA is like example is the most powerful country in the world. Europe was at the top in a certain period of the time. Same for the UK, same for the Spain, same for the French, same for the Turkeys, same for the Arabs people, same for Chinese people, same for Japanese people. Everyone has his pick, okay, and currently USA in the pick, but those people cannot stay at the pick forever, okay, whatever they do. So, um, as you can see here, I have some phases. Okay, I mark the market structure. Charles Dow explained the accumulation, reaccumulation, the distribution is close to the Wyckoff concept. It's literally the same, and the higher highs, higher lows. Okay, me here, I add the trap zones as you can see, and the way how I see that, I add relationships direct relationships with the inducement cycle and the way how the algorithm and the institution and the big boys induce your money in the markets. Okay, so the first phase I want to focus with me. The first phase is the money transfer phase. This phase is the most powerful place. Is the most powerful place in the markets where the algorithm. Alright, let's set up pen here. Where the cash, where there is a lot of fucking cash, and that will cause crazy movements. So this is the origin of this move. So you should understand one fucking idea in the first phase. First phase mean a lot of money, mean a trap or inducing a lot of people on the higher time frame. And on this phase, price start making sideways range or start making higher highs, higher lows if the price is bullish, or low high if the price is bearish. And the price at this period of time respect the structure so well. Why the price respect the structure? Let's give example. Like example, Jonathan is the hedge fund and he wanna buy at a fucking cheap price. Let's say the cheap price is $5 and the expensive price is the $20. Okay, so that guy buy at 5. Of course he's not going to buy 1 unit or 2 units. Okay, like example, he's going to buy 100 units for $5, and because he have a big pocket, he will save that for himself and he sell it whenever he wants. He will hunt the stop losses, hunt everyone here, buy cheap price, and this is the cash flowing. Okay, this is the cash flowing period for Jonathan to start selling, and then you guys take the market again, and the same process, the same theory happen. I try to explain it so basically, so easily. So first phase, cheapest price, a lot of orders, price respect structure. What I mean when I said price respect structure, we will see that on the next page, not here. Second phase. Okay, let's go back. So the second phase, this one. What's going on the second phase actually? On the second phase, most of the people, we will see a scenario about what happened. So most of the people get trapped in the markets. Most of the new traders think that the price is too much expensive. Okay, they have this idea, price go too much higher, so we should see price retrace or reverse. But that does not happen. Price just make small retracements on a premium expensive price area and keep going up. We will see that on the next and understand why that happened. Sometimes at the phase 2 of the market structure, price can reverse, and this is have relationships with the inducement cycle directly. Okay, so I just want you to focus with me with these things only. I'm just telling you what you have in your mind, because you will try to practice these things and you will see that the market sometimes reverse from the phase 2 directly or from the trap phase. And you will say, Vito say that the phase, there is a phase 1 and 2 and 3 and 4, but I don't see that in the real chart. Why price reverse here? You will understand that so fucking well later. Right now I want to take your fucking brain and try to use it a little bit with a lot of practicing, of course, because these things is necessary. So phase 2 is this. Here the price protects the orders. Which orders? These fucking orders that Jonathan buy for $5 price here protect those orders. So the people that talk buys here, Jonathan still wanna take buy to push price higher more and sell for expensive price. Okay, much more expensive. So I have the fake phase here. This is where most of the people that they use structure, or they use supply and demand, or they use support and resistance break, or they use breaker blocks, or they use mitigation blocks, or whatever they use, price take them out easily and beautifully, because they think that the right time for the retracement, that the right time where the price should go down, uh, and they don't see any buy opportunity, or they have a fear to take a buy opportunity at a certain price level like this. Okay, so directly they don't understand the directional bias. When this fucking trend, what is the end of this fucking trend? When the price could reverse, maybe he use a certain higher time frame market structure narrative in the left, and they try to expect the price to go down from this level, and this is totally stupid, wrong idea. This is the phase 3 actually. Okay, it's not necessary to see this phase. It's not necessary phase for me. This one and this one and this one is the necessary one. This one sometimes happens, sometimes does not happen. On pair like the EU, like example, or GU, these things happens most of the times. But on pair like GG or something, only few times when I see this, and I will discuss that too later. So price go, fake break and go. So I have here a money transfer. Transfer money from what? From a zone. There is a transfer money from a zone, even if the price did not take any liquidity. We'll discuss that too on the cash transfer episode, next episode. So price go here, take out the high. Again, what you can see, I can see that the price spent a certain period of the time here. Okay, so time is money. Price spent time here, price spent time here. The more the price spend the time in a certain area or in a certain place in the markets, the more there is a high probability that the movement too is huge. The next movement is huge. Because a lot of time, that most of the times that when the price spend, let's give example. Let's give a fucking example. This is sideways range, okay? People here, retail traders, even institutions, they don't always win, okay? Price can trap sometimes even the institutions, and they can take huge losses, millions, and they can go to billions sometimes, okay? Depends on the pair those people trade, and the price can really manipulate them. So what's going on in this place? See a lot of things, okay? A lot of things. This is a high volume, okay? This is a high volume place. So a lot of transaction, a lot of shit, price go up and down, up and down, up and down. Wherever you try to set your stop loss, price can just hunt your stop loss easily. And you don't understand why that happened. Okay, some people see that as a market structure. He see in the memory of the price that the price was higher, low, higher, low. So he will ask himself, price all this way was making this higher highs, higher lows. Then now price going to trap me, and they see this break and they want to take the buy here, and they say, yeah, that's the right place, that's the right decision where I should take the buy, and price just burn his accounts with the crazy movements. We will discuss that better on the live chart. Let's go to the next. So here, the way how I read the ALGO market structure, the real ALGO market structure, I want you to understand the idea why we need market structure. We don't use market structure to identify or to take the decision of the directional bias of the markets. I want you to keep that shit in your mind. I never take any decision based on the market structure. Okay? The directional decision we took is based on the inducement cycle. You will master that and understand that later. Market structure, we use it to know premium and discount and to know phases, which fucking phase we are in, to understand the right price. If the price is cheap, if the price is expensive, if I am on the order flow period based on the market structure, or I am on the cash flowing period based on the market structure. What is the order flow period? The order flow period is the period where the price let's give example. This is order flow. What I mean by this is a perfect place, cheap price, where institutions set a lot of orders and a lot of transactions happen in this sideways. Price make this boom movement like I told you. So here we enter to the cash flowing period. Okay, the period where the algorithm, where the institutions, where the profitable top people, 1% people, where the 1%, to explain it, so basically already making gains. Okay, they're already in the gains or break even or whatever, they're making profits. So when the price made that booming movement where this huge gap or imbalance on the price happened, this is the cash flow period. Already set the order. Okay, this is not order flow period, this is the cash flowing period. Good. So here, low, high, low, high, low. Some retail traders got the market structure. They can came here and say, this is a lower low, high. You can see that as a lower low and lower high. This is wrong. And not because the retracement is small, because there is some scenarios where you can see beautiful retracement like this and still not valid. Why this is not valid? Because price here or here fell to retrace above the 50% of this expansion movement. If I draw my fib from this lower high and I say or expect maybe this is the future lower low, price here failed to go to the 50%. You can see the 50% here easily of this expansion movement. If the price fell to go above this 50%, it's just internal. So basic, so easy. Okay, keep that in your mind. Another mistake some traders made when there is a complex pullback. What is a complex pullback? When there is A, B to C. So this is a normal classic pullback, price retrace directly and go directly. This is complex pullback where the price, this is the 0, this is the A, this is the B to the C. Okay, so make something like this, 1, 2, 3, then go down. Some people here, they can have some doubts when they try to mark the structure. If you still retail, you can use, I don't suggest, to be frank, to use the zigzag indicator or anything. Try to read it with a pure price action. Send me your markups, even if I'm now live, the community or my beautiful small family, another guy who mastered the structure, he can show you your mistake. Okay, so some people here, they can mark that as a structure. This is not structure, and most of the times this movement here is a trap zone. Okay, 80% of the times. We'll discuss that too later. So this is not structure, this is the structure, this is the lower low, this is the lower high. What's inside is the lower time frame structure stuff that happened actually here. Lower low, low high, Someone can came here and say this is the lower high, this is the lower high. Okay, so because this is a complex pullback, and that's how the price continue pushing lower. Beautiful. What we learn, if the price failed to go above the 50% of the movement, it's just liquidity. Lower low, low high, lower low. This low failed to go above the 50% of this movement, so I don't see that as a 1 hour, because this is 1 hour time frame. I don't see that as a 1 hour break of structure. I see that as internal sweep only. Let's see the next one. Topic, market structure, order flow. So this is a beautiful example on the live chart, how it looks like. Okay, one of the charts. My markups here is clear. This is the phase one. Can you see the time price band on the phase one? What happened after that? This scenario on the GJ. So here is 300 pips minimum, or 350 pips. What the price made? Take the highs, take the lows, take the highs, take the lows. A lot of transaction, a lot of transaction, a lot of liquidity, sideways range, manipulating both sides of the market, the sellers, the buyers, because the people who was taking the price already from here, from the bottom to the top, they want to make some money here. So another people take the price, that what price make a sideways range. Doesn't mean there is no offer, does not mean sideways range, does not mean there is no supply or demand. There is no offer in the fucking markets. There is no one of interest to take buys or sell. Some stupid people explain this stuff, and some dumps start repeating this stuff. That's not what I really mean. What I really mean when I say shit like this, it means some people enter here, they make some money here, they take the profits here, they sell to another guys here. That's the only fucking meaning. What happened after the price made all this transaction? The boom movement. Where is the boom movement? The boom movement is huge imbalance, okay? Huge gap in the price, okay? Fair value gap. This is the fair value price, then the fair value gap. The fair value gap is the cash flowing period of the market, okay? The cash flowing period in the market. Keep it simple like this. What happened? Price made this phase. What can you see here? You will ask me a question, Mr. Vito, why price here fell to retrace to the 50% of this movement? This is a very interesting, beautiful question. If we see the last structure here, price respects. This is the last structure, price respects. What I mean by respects again, retrace to the 50%. You see, it looks random structure. Let's see how I can read it. This low, break the high and break the high. So create this higher high. This higher low, retrace to the 50%. Is this higher low valid? Yes, it is valid. Price go break it with beautiful volume, with the bodies of the candle close below it. Interesting. Retrace again. This movement fails to retrace to the 50% of my expansion movements. So I see that as internal liquidity. So this is a break of the market structure. No, it's not a break, it's just sweeping liquidity, because this movement, this high, it's not above the 50% of this expansion. So probably this break here is fake. So price retrace go where? Sweep import liquidity. We'll know what is import liquidity later. You will see that on the liquidity episode. And I have here this high. So price protect this high successfully. Open with a gap, go break this low. So normally you should draw your fib from this high to this low and look for buy here, because it's a discount price, it's a cheap price for the price to go above the 50%, and then you should look for sell because it's expensive price. No, that's not how I trade structure. That's not how I see structure, and that's how not how I use it. Let me tell you idea. This place here, this place that you see here, after the boom movements, the cash flow movements, I see that as a protected phase. So how can I trade? How can I deal if I want to use structure as a confluence in my trades? How can I use it really here? Follow the new structure. That's the key. Do not, do not, do not go to the weekly or monthly or the daily. You should understand the idea. This is this words is a love experience. Believe me, it's a love experience in this world. If you try to trade on the equilibrium levels, price is going to fuck you. Okay, if you try to trade on the equilibrium levels, price is gonna fuck you so well. It's gonna fuck your pocket so fucking well. You should understand the cheap and the expensive. That's all what you need. How? Price here go, make the boom movement so well. Here, I don't wanna follow this structure anymore because this place, in this period, was the order flow place. When the cash flow happen, a new order flow, price creates a new order flow. Okay? New orders, new money, new manipulation, new inducing. I want to follow this new stuff. So I will follow here the new structure price that I can see that the price respects whatever the time frame, which time frame you use, whatever the time frame. Okay, if it's the 15 minutes, it's good. If it's the 1 minute, it's good. If you are intraday and even the 5 minutes, it's good. If it's the 1 hour, let's say this is the structure of the daily and this is the 4 hour or 1 hour, fantastic. If this is the daily movement and this is the 1 hour, fantastic. Follow this new stuff. So from this high to this high, this is your new price list and this is your premium level. Forget about these premium levels here because this place is protected. But how can I know if this cycle or is this phase fell? Because you already told us that the price sometimes can fall on the phase 2 of the structure. This is another topic. This is the inducement cycle. I'm just telling you the question you have in your mind because I already know what you have inside that fucking mind. Okay, you're a retail and I have. I mastered that. I was a retail too and I know what you have inside that brain. So just focus with me what I'm explaining to you right now. Forget. Remove everything you have. Any fucking idea. Just focus with this stuff. In that place, price respect the structure. In that place, price respects and you create a new structure and that respects that structure. Simple and easy. Let's go to the next. So what I have here is the example I talk about, and right now I will show it. This is the 50%. This is the killer place. Okay, this is the killer place. Like you have the kill zones and stuff. This is the kill place. This is the real kill level in the market, not kill zone. Kill level in the market. The kill. This one. This is the 50%, okay? What's price made here? Higher highs, higher lows, higher highs. You go retrace below the 50%. You say everything is fantastic. Price go below 50%. It's a cheap price. Let's look for buys. Price swap. Internal liquidity looks fantastic too. I want to take a buy. What's going to happen to you if you are a guy that trade directly after price swap and liquidity? Price take your break even, because probably you cannot catch the pick. No one catch the pick. And if you see someone catching the pick on his IG, he's a scammer. If you enter here or here, price take you out. If you try to enter here, price reverse on you. If you try to look for sell here, and only few people will look for the, it's good. Okay, but why I should look for sell? There is no fucking reason, only if I hedge my position exactly. I want you in a place like this to not expect the next movement. Okay, but to hedge your position, using the structure, hedge your position here. Okay, just hedge your position. If the price go take out this low, how I enter and everything and all this stuff, we'll discuss it later. Me as inducement cycle creator, I was going to say students, but let's say a student, here I will look for buy. Okay, here you should look for sell. You should take a buy and a sell, and I will teach you exactly how you can do both of this. Both of that shit. You can take the buy here, the perfect buy, and the perfect sell. The only place where price could hit your stop loss is maybe that place, to hedge the sell position and to take a new buy, and it's totally good. Okay, this is a hedging position. This is the 50% of the structure. Most of the people, SMC traders, wait the shift in the 1 hour time frame or 15-minute time frame, and the trades sound like this. Some people, they think they understand the algorithm, they wait the price to break the 1 hour market structure or 15 minutes market structure. Then price go take the internal or the external level, and they go to the 5-minute time frame or the 1-minute time frame, and they wait for something like this. Fake break high, fake break low, and they want to take a buy. This is random and shit. Okay, this is random and shit. We don't trade like this. Let's see the new. Okay, our example is the end of it. Right now, let's go to the real chart, to the live chart, and try to see a lot of examples together.